modern world, great leaders resolve their conflicts with words.
If that intro doesn't tell you I'm not a financial advisor and this is for entertainment purposes, I don't know what will. I'm your host, Hector. Welcome to Acequisition, where we cover all things finance through 5 key verticals: stocks and shares, acquisitions, profit maximization, asset protection, and even tax minimization. We have a strong focus on deep discount investing, which may involve us in some rare and exciting cases taking over these companies together with you, the viewer. If that sounds like something you want to be a part of, please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room linked in the description so you can get in these plays and opportunities when we do. In today's stocks and shares video, we're talking about ThreeD Capital, ticker IDK on the CSE or IDKFF on the US OTC market. A stock trading over 60% below its NAV per share, also known as audited book value per share. They also do an unaudited figure as well, which we'll go into shortly. This NAV per share, net asset value per share, sits at over $1. Now, this is my figure, but if you take the 92 cents unaudited figure that we got from them most recently, which they publish on a monthly basis, and add investments that they write down to zero or discount heavily, you can see how this is still likely a conservative figure. And at $1, price is currently 32 cents, which you can see would take us, 2 to 3x from here. And that's my first target for the company. Most companies trade at multiples of their book value per share, whereas this is trading at a discount. Similar ones such as Blackstone, Moelis, Berkshire Hathaway, all are trading at between 2 and 8x their net asset value. The chart on screen is from figures I took a year or so ago, but you get the point. It's a family-run venture capital firm. They invest in a few main sectors: blockchain, AI, machine learning, Internet of Things, biotechnology, and junior resources. It's described like an ETF for ground floor investments. The company also has a great growth story due to its portfolio, which could see the stock go way further, like the CEO's previous company. On screen here, we can see their YouTube channel, and this is a really good place to see all of these individual investee companies and the growth potential of each. Now, the company is technically sponsoring this video through my marketing agency, but this isn't your typical sponsored video, as I'm reaching out to them for work and sponsorship, not the other way around. I refuse to work with companies unless they're good value for you and I would actually invest in them, which you can see in my brokerage here: 80,500 shares for nearly £20,000 or roughly $26,000. Let's start by breaking down this NAV of around $1. A very healthy balance sheet. The net fixed assets are, around 50 million Canadian. And this is what they disclose. They don't disclose all of their investments, and some are written down to zero or heavily discounted. So this is a conservative figure. You can see this 50 million figure on their spreadsheet here, adds up to 42, plus in digital assets, another 7 million. Also backing up my view that this is over $1 is a huge lawsuit win that they made just at the beginning of June. As you can see here, you can go follow me on Twitter. The value of this lawsuit was it was equal to the market cap of the company at the time. And the share price of the company that they won the lawsuit off of, Newfound Gold, the range at which it is traded has been between $3.60 to $5. Having just won a lawsuit from someone, they're probably not going to be on the best of friendship terms. If we were to put an average of value of those shares at, say, 4.2, which is on the lower end of this range that's been trading in, the value is, roughly 12.1 million Canadian, which is huge. That's almost as big as their market cap at the moment. Unheard of in the finance space for someone to have just one of their many projects or investments being equal to this market cap. Now we are going to do a deeper dive of each of the top investments that I'm interested in at the moment. But as we're doing this $1 breakdown, I thought I'd just touch on this ThreeD investment. Press release definitely gone under the radar for 300 million or nearly 300 million ThreeD notes.
When micropayers want to purchase goods and services, what they are purchasing is TDN. So you put in $1, you have one TDN. One TDN is equivalent to $1.
Right, wow.
Once you have it, you want to control it, you can split it apart, you can pay anyone for any kind of ThreeD service, they can pay anyone else, and it's got gateways back into the banking system. And some of that is automatically micro-distributed to us for the services that we are providing that platform. Some of that is then immediately micro-distributed to the TDN royalty holders, which is also then ThreeD Capital.
We have in ThreeD 280 million notes. Those notes, we believe, are going to get redeemed over the next coming years. And we believe that that's going to be cash flow to ThreeD, distributing a portion of to shareholders through some type of dividend.
But 280 million on top of the 17 million market cap at the moment could easily be a 5, 10, 15x. You can see at the moment how it should already be added into the NAV per share, which currently is not. Small caps don't really ever pay a dividend, and these guys are considering doing so and acting like a big board company, which is great to see too. The market cap of the company currently sits at 17 million Canadian. The assets I have are between 60 and 75 million. I've calculated this using their interims on screen here, showing 50.5 million. I've then added in the new 13 million lawsuit win. We should also include some value for investments like ThreeD and others that could one day have hundreds of million in value, but currently not given any figure at all. They also mention here how they only disclose these investments if they have someone on the board of the investee company or if they have a greater than 10% stake. But you can see how they might have less than 10% stake, but have an investment that's worth multi-millions. I now have them at between 55 and 60 million shares in issue, even in an absolute worst case fully diluted scenario of 67 million shares, even though the majority of these convertibles, which you can see on screen here, have a weighted average of double the current share price, that we would still be at potentially $1 per share. And this is why my target sits here. Now we're going to take a look and break down the track record of management and their history of running publicly listed companies. The CEO, Sheldon, has had many billion-dollar exits, taking his previous VC firm from 12 cents to $26. That's 150x. As a result, he met the likes of Warren Buffett, who you can see on screen here, and was even asked by Kevin O'Leary to be a shark on Shark Tank. Sheldon is very philanthropic, even donating millions to children's charities. In regards to ThreeD, they realize how undervalued they are, and they actually go ahead and buy back their shares, and even go a step further, which you might not have heard of before, and actually delete those shares from the market so they are no longer in circulation, keeping the float very tight and very healthy for investors going in. I was about to say that we're going to see these buybacks start again very soon, and one of the reasons I'm posting this video, and as I'm recording, they've literally just started the buyback. So they typically do it on a monthly basis, and we've just seen the first hint of those buybacks. They've just bought $11,000 of shares in their own company. Last time they bought hundreds and hundreds of thousands of dollars. We can see huge purchases of shares, $92,000, $27,000, as high as 83 cents, which is basically 2.5 times the current share price. And then please do not get confused by this red 650,000 figure. That is a cancellation. It's truly incredible. They're repurchasing the shares and then they are cancelling them to keep the float nice and tight. Shows that they really believe in their own company and the investments they have. It also shows us that they know how to run a public company too. ThreeD is also incredibly self-sufficient. They haven't had to raise money or do a financing in nearly over 7 years, other than a recent placing which they did, which might get some criticism, but I see this as purely strategic. It was for roughly 5 million units, but it gave the company 1.5 million in cash. And bearing in mind that they just won that lawsuit and received 12.9 to 14 million from winning that lawsuit, I think people are forgetting that they don't need this money from this placing. it's not a net dilutive event. It's not unusual, and it's, I think, a harsh criticism to say that they can't reward themselves for doing so. They just provided 14 million in shareholder value to people is a good thing, because it will mean management are motivated to then go on and progress the company and to do further transactions like these. The share structure is excellent for an OTC company. Most companies screw over shareholders. The best opportunities could obviously be worthless if the share structure was toxic or had death spiral funding, like, you know, the likes of other companies that we see. ThreeD are very transparent on the value of their company on a month-per-month basis, which you don't get with almost any other company too. They post their book value per share or their net asset value per share every single month, and the latest report was at 92 cents. Some highlight investments that I'd like to make note of here to really drive forward this growth potential and how the company could go further than just a 3x to where their book value is. There's lots of growth stories behind each of these individual investments that they have large stakes in, because they come in at founder level, which enables them to have the biggest stakes possible in these companies. First company I'd like to highlight is Todak Micropayments, probably the biggest one there. It's the first company in the world to effectively enable micropayments. It's 30 years of people trying to do micropayments, and these guys are doing it through effectively a new blockchain, like not on the blockchain, but like a blockchain. They're working with the likes of Cambridge University in the UK, where I'm from, Google, CIBC Bank, RBC Bank. Incredibly impressive, big names working with them. Just in those names alone, that we should be paying attention to this. Another top portfolio company I'd like to speak about is Hypercycle, who are securing the Internet of AI, completing tasks for the user for a fixed fee, and that fee is only paid when the job has been delivered. So it stops like cost of recruitment. It allows you to go outside your friend network and take what would normally be considered a risk. They've also had talks with NVIDIA. Here you can see they had those conversations with NVIDIA, so I'd be keeping an eye out to see if there's any further collaboration there. They are working with the likes of Ben Goertzel and SingularityNet. Ben is considered basically the founding father of AI and AGI. Another company I'm really liking is this mind-reading headset. It's effectively a competitor to Neuralink. Elon Musk's quite invasive, planting a chip in someone's head to read their brainwaves. This is doing it in a non-invasive way.
So imagine you have a technology that can help you understand yourself, your cognitive load, all the things that are distracting you each hour during the day. This technology essentially enables you to have that type of information in real time.
There's a technology race happening that you may not have heard of, connecting our brains with our everyday tech.
Our dream is that you'll be able to walk into a store, pick up a pair of Beats headphones, Apple AirPods, a Bose headphone, put them on your head. They can record your brain activity. You can seamlessly switch your music, send a text message, etc., etc.
Another really exciting company which goes into their mining vertical is QIMC, which is all about naturally producing hydrogen. This could be the West's way of powering their economy.
Price per kilogram of naturally produced hydrogen is $1 or less.
Wow. How much does it normally cost for these other companies?
Well, listen, you're talking about normally 3, 5, 10, 15, you're talking about multiples from what a naturally produced hydrogen deposit would be. If you think about it, it's just constantly recurring hydrogen. It's unbelievable, and it's below the cost of even fossil fuel derived hydrogen. It could be considered the holy grail of clean energy. The cleanest energy source powering that whole AI revolution. We've been looking at it with our partners at ThreeD, what's the next, I would say, vertical on the AI trade or even the AI revolution. And one of the big next verticals is the data centers, and and not only that, is the power behind the data centers. Where are you going to find all that energy? And that's where hydrogen came up.
Another epic portfolio company of ThreeD Capital is Palatronica, which is a physics-based cybersecurity company. Their motto is assume nothing and test everything. In the same way we can't truly trust our peers, let alone outside our friendship group. They're using physics to test everything technology based. A highlight piece of news from them is being subcontracted by Arkfield Canada, who won a $210 million contract with the Canadian government for CF-18 fighter jets. The fact that Arkfield Canada are subcontracting to them, you can see how there's a strong chance that Pelotronica could even get bought out. And with ThreeD having such a large stake, and you imagine a contract of this size, the return of ThreeD could be huge. The biggest dark horse investment I think there is a biotech company called Turn Bio, who are turning back age-related diseases through this idea of inflammaging and how inflammation causes most age-related diseases. Another reason why it's ThreeD's dark horse investment that could really move their needle is this recent 300 million epigenetic reprogramming deal for age-related eye and ear conditions, and the potential value of this deal of more than 300 million. Just to teach you guys a bit about some technical analysis and entry and exit points, you can see here that I call out the company on Twitter, which you can go follow. I use a 9-period moving average, which is this blue line here. The stock's trading above it, you should be keeping hold of it. And then if it starts to break below, I mean, at that point, you can make some decisions as to whether you want to take out your initial investment. As the company's having a dip, but you still obviously believe in the fundamentals of these companies, this 9-period moving average is very good at telling you when to add. I mean, I know here there was a point where you might have added a little bit high, but then you get really good points down below here to add when extremely low. And we saw off that NFG news that the price went up 55% and a bit more, and then came down again. But then as soon as the trigger occurred for this 9 moving average break again, we've seen the company since go back up to about nearly 40 cents. This is how to effectively enter and exit your trades. This is what I use. We're starting to trade below it, but I wouldn't have any concerns. I'd be looking at this range here to be adding heavy. If we broke below, you'd have to then think, okay, let's pause, let's have a recess of the company. Were there any net dilutive events? No. Therefore, keep buying and using these technicals to add down. Another very, very crucial moving average to look at is this 200-period moving average, which is the green line on screen here. You can see how we bounced off it slowly, then we came back below, struggled to get back above, bounced off it again, come up and started to fall off of it again. If we can get back above it, as we have done in the past, you can see we start trading off the bottom of it, and then we can, see some really explosive moves higher. I mean, you can see how this moving average works in the past. We've had, even when it gets below, you can see how it gets to it, falls down, gets up to it, falls down, gets up to it, falls down. So hopefully we can get back above it, which I think is very easy to do, bearing in mind that the net asset value of the company, which was just reported at 92 cents, is all the way up here. And as we've discussed, it should be much higher because, like those Todak notes that, could be 280 million one day for ThreeD. That would send this stock to the absolute moon. But even in its current state, that should have the company, well above $1 per share. You can even see based off the chart as well, there are still crazy opportunities to even trade in the consolidation zone. You could be making 30% from the lows trigger of the moving average break up to the 200 until eventually we see a break above. But equally, I would be very cautious. I mean, I don't, as you see in my holding in my brokerage, I've just held because I don't want to be missing out if this does really start to break higher. The only thing I would say that could be a risk to this company is if we see any net dilutive event, which we haven't seen for all of those years. Thanks guys, that's been a deep breakdown of ThreeD Capital, and there will be follow-up videos on them as they progress. Feel free to share this video with a friend to help them make money too. You could even charge them a commission on profits made or for finding this page. May the gains be in your favor.
As for me, I like the stock.
Order filled.